Somewhere inside a research lab connected to the United States Department of Energy, a machine that isn't supposed to be ready yet just did something that classical supercomputers have failed to do for decades. It didn't just run a calculation, it cracked open one of the most stubborn bottlenecks standing between humanity and unlimited clean energy, and within hours, owed contracts and started talking about fusion. If you've been told that quantum computers are still a decade away from doing anything useful, what you're about to hear is going to force you to rethink that completely. Stop and think about how strange that sentence actually is. A computer, built on principles of physics so strange that even the scientists who developed them struggled to fully explain them, just contributed to solving a problem that has haunted the clean energy industry since the Eisenhower administration. This isn't a simulation running in some isolated academic paper nobody will ever read. This is a result tied directly to the United States Department of Energy, coordinated across national laboratories, and it moved a $280 billion company's stock price within hours. That combination, cutting-edge physics, government-backed energy policy, and real market money all colliding at once, almost never happens this cleanly. So let's actually break down what happened, why it matters far more than the headlines suggest, and why traders and long-term investors alike are suddenly paying very close attention to a sector most of them had written off as science fiction just a few years ago. For almost 70 years, scientists have chased the same dream: build a small star on Earth, fuse hydrogen atoms together the same way the sun does, release a staggering amount of energy, and power entire civilizations with something close to limitless fuel. The physics has never really been the problem. We've known how fusion works since the 1950s. The problem has always been engineering, and buried inside that engineering problem is one ingredient that has quietly wrecked project after project: tritium. Tritium is a radioactive form of hydrogen. It barely exists naturally on Earth. The only trace amounts show up in the upper atmosphere, created when cosmic rays strike nitrogen molecules, and even then the quantities are so small they're almost irrelevant. The entire planet's stockpile of usable tritium can be measured in mere pounds. And here's the brutal part. A single working fusion power plant would burn through roughly a pound of tritium every single day just to stay online. You cannot mine it. You cannot buy enough of it. If fusion energy is ever going to leave the laboratory and enter the real world, every future reactor will have to make its own tritium while it runs, in real time, continuously, for decades. This is called breeding tritium, and it depends on a material most people have never heard of: flybay. Flybay is a molten salt made from lithium fluoride and beryllium fluoride. Picture a superheated, glowing liquid blanket wrapped around the plasma core of a fusion reactor. As the fusion reaction fires neutrons outward, that blanket of flybay absorbs them and, through a careful chain of nuclear reactions, produces new tritium. At the same time, this molten salt also acts as a thermal shield, protecting the reactor's structure from the ferocious heat generated at its core. On paper, flybay looks like the perfect solution. In reality, the chemistry inside that molten salt is so complex, so tangled with competing molecular configurations, that even the world's most powerful classical supercomputers have struggled to model it accurately. Scientists could describe the theory. They just couldn't simulate the reality with enough precision to design a reactor around it. It's worth remembering just how many billions of dollars and how many careers have already been poured into fusion energy without a commercial payoff. Because that history is exactly why this moment feels different. Massive international projects have SP-ent decades and tens of billions of dollars building experimental reactors designed simply to prove that a fusion reaction can produce more energy than it consumes, a milestone that has repeatedly slipped further into the future than originally promised. Private fusion startups have raised enormous sums of venture capital over the past several years, chasing smaller, faster, cheaper reactor designs, betting that clever engineering could sidestep the problems that slowed down the giant government-backed projects. Almost every one of those efforts, whether government-funded or venture-backed, eventually runs into the exact same wall: the fuel cycle. You can build a beautifully engineered reactor chamber, achieve the plasma conditions you need, and still have no realistic long-term plan for producing enough tritium to keep the thing running for years on end. That's precisely why a breakthrough aimed directly at the tritium-breeding chemistry inside flybay lands so differently than yet another headline about plasma temperature records or magnetic confinement tweaks. It's not decorating the problem, it's attacking the actual bottleneck that has quietly ended more fusion timelines than any single engineering failure ever has. That is, until now. In a project tied to the Department of Energy's Genesis mission, researchers from Oak Ridge National Laboratory, the Cleveland Clinic, and IBM joined forces to attack this exact problem. This wasn't a small side experiment. It pulled together 7 national laboratories, 4 universities, and 3 industry partners, all coordinated toward one goal: proving that the fusion of quantum computing, artificial intelligence, and classical high-performance computing could unlock scientific problems that none of those technologies could solve alone, And in July of 2026, they announced something that stunned even seasoned physicists. Using IBM's quantum hardware, working in tandem with classical supercomputers, the team successfully calculated 9 different molecular configurations of Fly-B. This marks the first time in history that quantum computers have been used to directly simulate reactions relevant to the inside of a fusion reactor. To understand why this matters, you need to understand what makes this kind of chemistry so brutally difficult for ordinary computers. Molecules, like the ones inside Fly-B, don't behave the way marbles or billiard balls behave. Electrons exist in strange, overlapping probability states. As you add more atoms and more electrons to a system, the number of possible quantum states doesn't grow in a straight line. It explodes exponentially. A modest molecule can require more variables to describe than there are atoms in the observable universe. Classical computers, no matter how many transistors you cram into them, hit a wall trying to track all of that information at once. It's like trying to predict the exact path of every raindrop in a hurricane using pen and paper. Even the most powerful classical supercomputers on the planet, machines that fill entire warehouses and consume as much electricity as a small town, run into the same exponential wall once molecules get complex enough, no matter how much raw processing power engineers throw at the problem. They can approximate, they can simplify, they can make educated guesses using clever shortcuts, but for certain classes of problems, the approximations stop being good enough. Engineers designing a fusion reactor can't afford to build a real physical prototype based on a rough approximation of how Fly-B behaves at the molecular level. The margins for error are too small, and the cost of getting it wrong, both financially and in terms of wasted years, is too high. Quantum computers approach the problem completely differently. Instead of representing information as simple ones and zeros, they use qubits, which can exist in superpositions of states simultaneously. In principle, this lets a quantum processor represent the tangled, overlapping nature of molecular electrons FAR more naturally than a classical machine ever could. The catch has always been reliability. Creep in. Qubits lose their fragile quantum state after fractions of a second. For years, critics have argued that quantum computers were more hype than substance, that they couldn't yet outperform classical machines on any problem that actually mattered in the real world. This Fly-B breakthrough is a direct answer to that criticism. IBM didn't rely purely on quantum hardware in isolation. Instead, the team used what IBM calls quantum-centric supercomputing, a hybrid approach that weaves quantum processors directly into classical high-performance computing clusters as specialized subroutines. Think of it less like replacing your laptop with a quantum machine, and more like installing a highly specialized coprocessor that classical systems can call on for the exact calculations, where quantum mechanics gives it a natural advantage. IBM's own chief technology officer for quantum-centric supercomputing described this fusion of quantum, AI, and classical systems as essential for tackling humanity's most fundamental scientific challenges, precisely because none of these technologies alone could unlock this kind of capability. And this wasn't an isolated stunt. Just months earlier, in March of 2026, IBM had already achieved a separate quantum milestone, successfully modeling a magnetic material called KCuF3 on quantum hardware, with results that matched real neutron scattering data gathered from national laboratories. It's also worth pausing on why a hospital system, of all institutions, ended up co-authoring a fusion energy breakthrough. The Cleveland Clinic wasn't randomly attached to this project. It had already been using quantum-centric supercomputing techniques to simulate protein configurations for medical research, essentially applying the same underlying computational approach to understanding how complex biological molecules fold and behave. When researchers needed expertise in wrangling extraordinarily complex molecular simulations on quantum hardware, that medical research team's experience translated directly into fusion materials science. That crossover is a small detail with a big implication. The same quantum-centric techniques being used to design fusion fuel today are drawn from methods being developed to design better medicines. And that overlap hints at how broadly useful this style of hybrid quantum classical computing could become across completely unrelated industries, from energy to pharmaceuticals to advanced materials science. Then, a company called QCTRL announced it had achieved a 3,000 times speedup in materials discovery simulations running on IBM's quantum systems by applying advanced error suppression techniques to a standard benchmark model used for simulating electron behavior in materials. Individually, each of these results might sound like a narrow academic footnote. Stacked together, across just a few months, they start to look like a pattern. Quantum computers quietly crossing the threshold from experimental curiosity into a working scientific tool. Zoom out for a second and look at the sheer scale of coordination behind this project, because it tells you something about how seriously governments are now treating quantum computing as strategic infrastructure. The Genesis mission isn't a small internal IBM research initiative. It's a Department of Energy program designed to unify high-performance computing, artificial intelligence, and quantum computing with the country's major scientific instruments spread across 17 national laboratories. That's not the kind of resource commitment a government makes for a technology it considers a novelty. It's the kind of commitment a government makes when it believes that technology is about to become foundational to national competitiveness, energy security, and scientific leadership for decades to come. When Oak Ridge's own computational chemist described quantum computers as key tools that accelerate the discovery and design cycles needed to produce sufficient tritium for fusion reactors, he wasn't speaking as a marketing executive. He was speaking as a government scientist watching a genuinely difficult problem get easier in real time. Researchers involved in the Flyby study were careful to point out that this is still early-stage science. The team modeled 9 molecular configurations. Real-world reactor design will eventually require modeling vastly larger, more complex molecular clusters, with far more configurations and far more precision. Scaling this technique up will take years of continued work. But the significance isn't really about the size of what was calculated. It's about the fact that a quantum computer produced trustworthy, verifiable results on a problem that had genuinely stumped classical computational chemistry for years. That distinction is the entire ballgame. It's the difference between a science project and the first working prototype of a new kind of engineering tool. A science project generates interesting papers. A working prototype generates investment, contracts, competition, and eventually entire industries built around it, which is exactly why the reaction to this announcement extended so far beyond the physics community and straight into trading floors within a matter of hours. Now here's where this stops being just a science story and becomes a Wall Street story. Word of the Flyby breakthrough hit the markets, and IBM stock didn't sit still. Shares climbed roughly 3.5% in the days following the announcement, and with some trading sessions showing gains as high as 5% as investors absorbed the news. To put that in perspective, IBM is a company with a market capitalization north of $280 billion. Moving a stock that size by several percentage points on a single scientific announcement is not a small thing. It tells you institutional money was paying very close attention. Analysts covering IBM largely carry a consensus rating in the moderate buy to buy range, a rating that reflects genuine institutional confidence rather than pure speculation. And in the days surrounding this breakthrough, at least one major research firm raised its price target on the stock, citing renewed confidence ahead of IBM's quarterly earnings report. That timing wasn't a coincidence either. IBM's second quarter earnings report landed just weeks after this fusion milestone became public, which meant every analyst updating their models had this quantum result sitting fresh in their notes while they weighed guidance on cloud revenue, consulting bookings, and the pace of AI adoption across IBM's client base. When a scientific headline lands that close to an earnings cycle, it tends to get folded directly into the market's near-term narrative about the stock, rather than treated as an isolated, forgettable research update. This quantum fusion milestone didn't happen in a vacuum either. Just weeks before, IBM had already sent shockwaves through the tech investment world by committing more than $10 billion over 5 years toward fault-tolerant quantum computing. That single announcement initially triggered a sharp rally in IBM shares, an unusually aggressive move for a stock long associated with slow, steady, unglamorous enterprise technology. Investors briefly treated IBM the way they might treat a scrappy quantum startup, chasing the story rather than the balance sheet. Then reality set in. Once the market digested the sheer size of that $10 billion bet and weighed it against IBM's falling free cash flow, some of those gains reversed. That kind of whiplash, a huge rally followed by a partial pullback, is exactly what you'd expect when Wall Street is trying to price in a technology whose commercial payoff might still be years away. And that tension, hype versus fundamentals, is really the story running underneath IBM's entire stock narrative right now. IBM has been engineering a long, deliberate pivot away from being remembered as a legacy mainframe and hardware company, and toward becoming a serious player in artificial intelligence, hybrid cloud, and now quantum-centric computing. The mainframe business hasn't disappeared. In fact, IBM's core Z-series mainframe revenue reportedly surged more than 50% year over year, and the company kept innovating there too, rolling out compact single-frame and rack-mounted versions of its Z17 and Linux 1 systems aimed at pulling small and mid-sized businesses into that ecosystem with a focus on artificial intelligence workloads and post-quantum security. At the very same time, IBM's generative AI bookings have reportedly topped $12.5 billion. So why does Wall Street remain divided on a company stacking up wins like this? Because monetization is still the open question. IBM has publicly targeted 2029 for the debut of Starling, its planned fault-tolerant quantum computer, the kind of machine that could run these fusion-relevant simulations at a scale far beyond 9 molecular configurations. That's still years away. In the meantime, the company is burning significant capital to get there, and some analysts have flagged concerns about free cash flow and existing debt levels as IBM funds this quantum and AI build-out. The bulls argue that IBM is positioning itself to become something like the NVIDIA of quantum computing, a foundational infrastructure player that captures enormous value once fault-tolerant quantum systems go mainstream. The skeptics argue that between now and 2029, there's a long runway where quantum computing generates headlines and research papers, but not yet meaningful revenue. What makes the Flyby fusion result so important to that debate is that it's one of the first pieces of hard evidence that quantum-centric supercomputing can already produce scientifically validated, real-world useful results years before the fault-tolerant era even arrives. It's proof of concept, delivered early. And markets tend to react strongly to proof of concept because it changes the probability investors assign to the entire long-term thesis. A $10 billion bet on quantum computing sounds a lot less speculative the moment quantum hardware starts producing results that classical supercomputers physically could not achieve on their own. There's also a bigger energy story tangled up inside this stock story, and it's worth slowing down on. If fusion energy research actually accelerates because quantum computing helps solve the tritium bottleneck faster than expected, the implications stretch far beyond IBM's balance sheet. Experts have projected that, at scale, a single fusion reactor could generate roughly 4 million times as much energy as a coal-burning power plant, and about 4 times the output of a modern nuclear fission reactor, without the long-lived radioactive waste problem that fission carries. Several experimental fusion reactors are already under construction around the world right now. If quantum-assisted material design genuinely shortens the timeline for solving the fuel cycle problem, we could be looking at fusion transitioning from a maybe someday concept into a real, buildable source of clean energy on a meaningfully faster timeline than most experts currently assume. That's exactly why Wall Street noticed. This isn't just a story about one company's quarterly stock move. It's a signal event for 2 entire sectors at once: quantum computing and clean energy. Fusion-adjacent and clean energy-adjacent stocks tend to react to headlines like this too, because a credible acceleration in fusion timelines changes long-term assumptions about energy markets, decarbonization targets, and where the next generation of massive infrastructure investment might flow. When a single announcement can move sentiment across quantum computing stocks and clean energy stocks simultaneously, that's the kind of cross-sector shock that professional traders and long-term institutional investors both pay very close attention to. Think about what a genuinely working fusion industry would actually mean for the global economy, because it's easy to hear the word fusion so often in science headlines that it stops registering as something real. A functioning fusion power grid wouldn't just quietly generate electricity. It would fundamentally rewrite the economics of energy-intensive industries, from steel and aluminum production to desalination, and notably to the enormous power demands of training the next generation of artificial intelligence systems. Right now, one of the biggest bottlenecks facing the entire AI industry is electricity. Massive data centers are straining regional power grids, and tech companies are signing long-term deals with nuclear plants just to guarantee enough stable power for their AI ambitions. A credible, accelerated path toward practical fusion energy doesn't just solve a climate problem, it potentially solves an AI infrastructure problem too, which is exactly why a story that starts with quantum, computers and fusion materials ends up looping right back around into the broader AI and technology investment story that's been dominating markets for the past several years. That interconnected nature is part of why this specific announcement traveled so fast through financial media and investor circles. It's rare for one piece of scientific news to simultaneously touch quantum computing, clean energy, government science funding, and the long-term power constraints facing artificial intelligence all at once. Stories that sit at the intersection of that many major investment themes tend to get amplified quickly, discussed on financial news networks, dissected in analyst notes, and picked apart on trading floors within hours of the original announcement landing. Naturally, none of this comes without healthy skepticism, and it's important to walk through that skepticism honestly rather than just chase the hype. Quantum computing has a well-earned history of overpromising. For years, breathless headlines about quantum supremacy or quantum advantage turned out to describe narrow, largely academic benchmarks with little real-world application. Critics are right to ask hard questions here too. 9 molecular configurations of Flyby is a meaningful scientific first, but it is still a small, controlled demonstration, not a finished blueprint for a working fusion reactor. Researchers themselves have been careful to describe this as an early step, one that will require scaling to much larger and more complex molecular clusters before it becomes a genuinely practical design tool for engineers building real reactors. There's also the ongoing challenge of transferring data efficiently between classical and quantum computing resources, a bottleneck that researchers are still actively working to reduce. On the financial side, skeptics point to IBM's debt levels and its declining free cash flow as real risks that shouldn't be waved away just because a headline sounds exciting. Committing more than $10 billion to a technology that won't reach its planned fault-tolerant milestone until 2029 is a genuine bet, not a guaranteed payoff. If quantum monetization takes longer than expected, or if competitors like Google, Microsoft, or a wave of specialized quantum startups leapfrog IBM's hardware roadmap, that $10 billion commitment could look very different in hindsight. This is precisely why you'll see IBM's stock swing sharply in both directions around news like this. The market isn't just reacting to the science, it's constantly repricing the probability of a very long-term, very expensive bet actually paying off. There's also a valuation debate quietly running underneath all of this that long-term investors can't ignore. IBM currently trades at a price-to-earnings ratio in the mid-20s, a level that reflects real optimism about future growth, not a bargain bin valuation. Some independent valuation models have suggested the stock is still trading meaningfully below their estimate of fair value, which bulls point to as evidence there's more room to run. Bears counter that those models often lean heavily on assumptions about future quantum and AI monetization that haven't actually shown up in reported revenue yet. Analysts covering the stock remain split, with a healthy cluster recommending strong buy ratings, a smaller group sitting on hold, and at least one holdout recommending a sell. That kind of spread across more than 20 analysts covering a single stock tells you this is a genuinely contested thesis on Wall Street, not a consensus slam dunk in either direction. Every future earnings report, every fresh quantum milestone, and every update on Starling's development timeline is going to keep shifting that balance one way or the other. Still, even with all of that skepticism on the table, there's something undeniable happening here. For the first time, a quantum computer has been used to calculate real chemistry relevant to solving fusion's most notorious fuel problem. And those results matched up with the kind of rigor scientists expect before they'll trust a simulation. That is not nothing. It's the exact kind of milestone that historically marks the transition of a technology from theoretical promise into practical tool. The moment when investors, governments, and competitors alike stop asking, will this ever work? And start asking, how fast can this scale? Zoom out even further, and this story fits into a much larger race happening right now, one most people outside the tech and finance world have barely noticed. Quantum computing companies around the globe are racing to hit meaningful, verifiable milestones before their competitors do. Because whoever proves real-world usefulness first tends to capture disproportionate investor attention, government funding, and industry partnerships. China has been unveiling its own quantum computing advances. Microsoft has been pushing its own next-generation quantum chips, chasing dramatic reliability improvements. Neutral atom quantum computing researchers have been announcing fixes to long-standing hardware flaws involving lasers. Every one of these headlines individually might seem niche. Together, they paint a picture of an entire industry accelerating at once, each player racing to be the one that turns quantum computing from a research curiosity into critical infrastructure. It's worth naming some of the players in that race directly, because the competitive pressure is a huge part of why this milestone landed with such force on Wall Street. Google has its own quantum roadmap and has published its own headline-grabbing benchmarks in recent years. Microsoft has been chasing topological qubits and next-generation chip designs aimed at dramatically improving error rates. Smaller, publicly traded, pure-play quantum companies, the kind retail investors have piled into during quantum hype cycles, have been racing to prove they can deliver commercially useful results, not just laboratory demonstrations. China has poured enormous state resources into its own quantum computing programs and has been unveiling increasingly capable machines of its own. Against that backdrop, IBM landing a genuinely novel, independently meaningful scientific result, one tied to something as universally significant as clean fusion energy, gives it a public relations and investor confidence advantage that's very difficult for smaller competitors to match. It's one thing to claim your quantum computer is powerful. It's another thing entirely to point to a peer-reviewed, government-backed result that solved a piece of a problem nobody else had cracked. Retail investors reacted almost as fast as institutional traders did. Quantum computing stocks, broadly, have developed a reputation over the past couple of years as some of the most volatile, most sentiment-driven names on the market, capable of doubling or collapsing within weeks, purely on the back of speculative enthusiasm, rather than actual earnings. A credible, government-backed, independently reported scientific result is a completely different kind of catalyst than a hype-driven social media rally. It's the kind of headline that gives retail investors something concrete to point to, beyond vague promises of a quantum revolution. And that combination of institutional analyst upgrades landing at almost the same moment as retail enthusiasm is exactly the kind of setup that produces the sharp, fast stock moves we saw around this announcement. IBM, for now, appears to be a step ahead in one very specific, very high-value lane, pairing quantum processors directly with classical supercomputers to solve real scientific problems today, rather than waiting for a distant, fault-tolerant future. That strategic choice, quantum-centric supercomputing, instead of pure standalone quantum hardware, is exactly what allowed this fusion materials breakthrough to happen years earlier than a wait-for-perfect qubits approach would have allowed. And that's a crucial lesson buried inside this whole story. The next major technological leap might not come from any single technology working in isolation. It might come from the deliberate fusion of multiple imperfect technologies, quantum, classical, and artificial intelligence, working together as one coordinated system, each covering the other's weaknesses. So where does this actually go from here? Researchers on the Genesis mission project have already stated their intention to expand this work, growing the size of the molecular clusters they can simulate and increasing the number of configurations studied, while also working to reduce the data transfer bottleneck between classical and quantum systems. If that scaling continues on pace, and if IBM's broader $10 billion quantum roadmap stays on track toward its 2029 fault-tolerant target, we could be watching the earliest chapters of a story that eventually gets remembered as the moment fusion energy stopped being 30 years away and started becoming a genuine, buildable near-term reality. Every additional molecular configuration the team successfully models from here narrows the gap between theoretical fusion fuel design and an actual engineerable reactor blueprint, and each of those milestones is likely to keep generating exactly the kind of market reaction we just watched play out with IBM. On the market side, expect continued volatility around IBM as investors weigh legitimate scientific progress against real financial risk, and expect competitors to respond with their own quantum announcements in the coming months, since no major technology company can afford to sit quietly while a rival claims this kind of headline. Watch how consistently the company can convert quantum research milestones into actual signed deals, contract backlog, and measurable segment revenue. Because that conversion, not the headlines themselves, is what will ultimately determine whether this $10 billion bet becomes IBM's defining success story or its most expensive gamble. There's one more angle worth sitting with before we wrap this up, and it's the psychological shift this milestone represents inside the scientific community itself. For years, plenty of serious, credentialed physicists were openly dismissive of near-term claims about quantum computing's practical usefulness. It was common to hear respected voices argue that meaningful real-world quantum advantage was still a decade or more away. The current hardware was too noisy and too limited to matter outside of narrow academic benchmarks. This Fleabee result doesn't erase that caution entirely, and it shouldn't, but it does force a recalibration. When government researchers at a national laboratory, working alongside a major medical institution and one of the world's largest technology companies, publish a result showing quantum hardware succeeding where classical methods struggled on a problem tied directly to solving the global energy crisis, the burden of proof shifts, skeptics no longer get to simply say quantum computing hasn't done anything useful yet. Now they have to explain why this specific result doesn't count, and that's a much harder argument to make. For anyone tracking IBM as an investment, the practical takeaway isn't to chase the stock purely on the emotion of a single headline. It's to watch for the pattern this announcement represents. A government-backed research program delivering a validated, peer-reviewed result. A direct tie to a massive, unsolved global problem. A clear, traceable link between that scientific result and a company's long-term capital allocation strategy. And a market reaction significant enough to show up in trading volume and analyst notes within hours. When you see that specific combination show up again, whether it's IBM or a competitor, that's usually a signal worth paying attention to, far more reliable than the kind of vague, speculative quantum hype that has burned investors chasing momentum in the past. Whatever happens next, one thing is already clear. Quantum computing just stopped being a theoretical talking point reserved for physics conferences and tech keynotes. It just helped attack one of the hardest unsolved problems in clean energy. And Wall Street reacted exactly the way markets react, when they sense something real is happening ahead of the crowd. If fusion energy eventually does become humanity's answer to unlimited clean power, there's a real chance we look back at this quiet July announcement, buried under bigger headlines, as one of the moments the timeline actually shifted. Make sure you like and subscribe so you don't miss the next update in this story, because between IBM's roadmap, the Genesis mission's next round of results, and the rest of the global quantum race, this is only going to move faster from here. This breakdown helped you understand why Wall Street is suddenly paying attention to quantum computing again. Hit subscribe and turn on notifications, because the next chapter of this fusion and quantum story is likely to move even faster than this one did.